Hi, I am Dr. Kantesha Sanningammanavara, presently working as Assistant Professor in the Department of MBA, Maharani's Women's Commerce and Management College, Mysuru. I am here for the discussion of an important topic, that is the structure of Forex market. In the previous session, we discussed the basics of Forex market, which included the introduction to Forex market, the meaning of Forex market, functions and the types of Forex market. This discussion is just a continuation to the previous one. Let us start the understanding of structure of Forex market with a typical example of stock market. This is how the structure of stock market looks like. We know that the buyers and sellers of stocks approach stock exchanges like BSE, NSE, NYSE through their brokers for the transactions. By its very nature, the stock markets control and monitor the prices of securities and safeguard the interest of investors. Why we call exchanges as centralized system? The reason for that, the exchanges sets a standardized system in the place so that no third person can influence and manipulate the system. It simply sets rules, regulations, guidelines, terms and conditions for the smooth conduct of each activity in the market. For example, it decides the terms and conditions related to many of the contracts that takes place. For example, futures contract. The specifications related to future contracts are decided by exchange itself. Specifications means here the price of underlying stock, the quantity of underlying stock, maybe market lot, the maturity date, and so on. Everything will be decided by the stock exchange itself. The buyers and sellers do not have any role to play here. They have to just accept the terms and conditions that are put by stock exchanges. It means that the entire system is controlled by the exchanges. But this situation is not similar for the Forex market. Let's see what is the situation. Before that, we'll quickly go through the meaning of Forex market once again. The Forex market is the market where the buyers and sellers are involved in the sale and purchase of foreign currencies, different countries' currencies. In other words, a market where currencies of different countries are bought and sold is called a foreign exchange market. For example, Mr. X buys US dollar at the rate of rupees 77.22 from Lulu Forex Private Limited, Mysuru. Guys, you have to remember one thing here, that the Forex market is not a physical place as such. It is just a system. It's a virtual system where transactions takes place over phone or electronic communication networks. So here Mr. X buys US dollar against Indian rupees, just placing order over phone or through any of the electronic communication system. So this is how the stock market is. Now we will discuss the structure of Forex market. So the Forex market is a decentralized market. It is not like the stock markets. So here there is no any standard format. It's all customized in nature. The terms and conditions or specifications related to any of the contracts will be decided by the parties who are involved in the contract itself. And it is composed of many players, just breaking the borders. It means that there are so many players. This market is made up of so many players: banks, financial institutions, brokers, individuals, exporters, importers. And they are not from one particular location, they represent the different parts of the world. And forex market is world's largest OTC market. As I told you earlier, that OTC means here the transactions of this market takes place over electronic form, electronic means. So the buyer and seller meet not physically but virtually and complete their transactions. And one more important thing here is that in this market there is no single price for a given currency pair at any time. It means that you cannot expect the same price. For example, you cannot expect same forex rate for Indian rupees and US dollar from all the dealers in the market. The quotations given by each dealer differ, they vary. That is what the beauty of this market is. So this is what the decentralized forex market. So there are so many players, as I told you. Banks are there, market makers are there, individual persons are there, ECN brokers are there. The forex market looks very overwhelming at first sight. And that is how the market is, in fact. And of course, it is awesome. The market is so big, it is gigantic in terms of size. And the competition between the dealers is very stiff, means very tight competition is there. Because of this tight competition, the people like us will get the best deals. Let's move on to the forex market hierarchy. As I told you in the beginning that the forex market is made up of so many players, and the same thing has been put it in the form of a ladder or one structure. It has got actually three layers or three segments or three tiers. The very top of the forex ladder is interbank market. The interbank market is composed of the largest banks in the world and some smaller banks. The participants of this market trade directly with each other or electronically through electronic broking services or routers dealing. The main participants of this market includes Citigroup, JPM Chase, USB, Barclays, HSBC, RBS, BNP Paribas, and others. These participants mainly determine the forex rates through their operations. In the next ladder, there are hedge funds, corporate firms, retail market makers, and retail ECNs. As these institutions do not have strong credit relationship with the participants of the interbank market, means the upper ladder market, they have to do their transactions through commercial banks, since they do not have a direct relationship or a strong credit relationship with the upper part of the structure. So they have to do transactions through commercial banks. That's what the rates for these participants will be slightly higher and more expensive than those who are part of the interbank market. The last ladder of the structure, At the bottom of the ladder, we have retail traders or speculators. We can call them as speculators who usually pay higher spread. Spread means here the difference between buying price and selling price. So why they pay higher spread? Because their trades effectively get executed through two ladders or two layers. Means the rates have to come from first layer and second layer. That's what the rates they have to pay will be higher. The primary purpose of these players is to make money trading in those currencies which always fluctuate. It means the changes in currency prices, whatever it is happening in the market, due to that fluctuation, they make the money. With the advent of technology and internet, even small traders can participate in this huge forex market. So this is what the main structure of forex market is. If I want to sum this up, okay, sum the forex market discussion, what I can say here is that the structure of forex market is composed of various players and it has three different layers. Top layer is composed of large and some small banks, and this layer is termed as interbank market. In the second layer of the structure, the participants do transactions with interbank market players through commercial banks, and they have to pay slightly higher price for whatever currency they buy or deal with. And finally, the bottom layer of the structure is composed of retail traders who usually pay large spread and make money due to changes in the currency rates. Therefore, we can say that the forex market is made up of varieties of players. Let us also quickly go through those main players of FX market individually. The first and foremost players of FX market are investment banks. The investment banks are large in size and also they offer varieties of services to their clients. Some of the services include providing forex risk mitigation services to their client, accepting order and processing the same for their clients, market making service. It means they create market for the rest of the players in the forex market. They provide risk management services like identifying risk, assessing risk, and controlling the risk through different techniques. And they also provide hedging services to their clients. Some of the investment banks that are involved in forex market are Bank of America, Barclays, Goldman Sachs, Deutsche Bank, JP Morgan Chase, and others. One thing we should understand here, the investment banks actually make the forex market. They are the core to the forex market. They create market for rest of the players in the market. That's what these investment banks are very important for forex market. They create interbank market. The next and very interesting players of FX market are government and central banks. There are 200 plus countries in the world. The government and central banks of those countries do take part in FX market with one or the other reasons. When government gets involved in agreement with other countries, it needs the help of forex market. For example, Indian government imports oil, that is crude oil, from foreign countries. For that they need the help of forex market. They import arms and ammunitions from military strong countries. They also involve in getting foreign loan. They take assistance from other countries as well. So during these situations, the government has to get involved in forex market. The central bank of respective countries do usually help their government to implement economic policies like maintaining supply and demand of currencies, preserving forex, and also buying and selling foreign currencies whenever situation demands. For example, when Indian rupee against US dollar depreciate, Reserve Bank of India pitch in and they start selling US dollar in the forex market to safeguard the Indian currency or to increase the demand for Indian currency. The next players of forex market are business firms. See, there are larger number of firms that are involved in international business. They mainly take part in FX market for paying for imports and receiving for exports of goods and services. They hedge their future payments and receipts. They handle foreign firms like subsidiaries, and also they take advantage of speculative situations in the forex market. Then we have these players: fund managers, hedge funds, and sovereign wealth funds. These players do mainly enter FX market with investment purpose as they deal with their client money. They want to diversify their client's portfolio and create maximum return with minimum risk. Usually fund managers represent here mutual funds. The funds usually deal with small investors, and the hedge funds deal with large investors who are ready to take risk and also share their profit with hedge fund firms. And again, we have another important fund here, that is sovereign wealth fund. These are the sovereign wealth funds. Sovereign wealth funds are the funds created by government with specific purpose. They are also one of the important funds in the country because they collect funds from various investors and invest the same on diversified assets. So one of the asset for these funds is all funds. I'm talking about mutual fund or hedge funds or sovereign wealth funds. They invest mainly in FX market. In India, we have the only sovereign wealth fund, that is National Investment and Infrastructure Fund, which was created in 2015 by Government of India, mainly to promote the development of infrastructure in the country. We have another important player of FX market, that is the internet-based trading platforms. The companies such as Plus 500, XTB, Mill, and so many accept orders and match them for their clients using STP technology. So that is straight through processing technology. And also they create liquidity for their clients on time. And the final players among important players of forex market are online retail broker dealers. These players provide online brokering services to their clients. The clients can buy and sell foreign currencies for reasonable brokerage. The top 5 online brokers in the world are Saxo Bank, TD Ameritrade, City Index, Forex.com, and Fusion Markets. So these are the main players who are involved in Forex market. These players compose the structure of foreign exchange market. I hope the discussion on structure of forex market was useful to you, and for any clarifications, please feel free to reach me out through below comment box. Thank you so much for being part of this learning and have a great day.